Hello, everyone. Happy Monday morning. How's everyone doing? Hope everyone had a wonderful weekend. Good morning, Richard. Yeah, I'm glad you're not in Baltimore either. It's a little dangerous in Baltimore. Everybody's coughing there? Hmm. Is everybody sick there? Something going around? Good morning, Sterling. Good morning, Patrick. Yeah, McDonald's reported this morning, beat. They it actually completed a little mini double bottom last week. What else we have? Hey, Alan, welcome back. Good morning, Alan. What else we have? A World Bank. Yeah, that would hurt. That would hurt. 140, 157 would hurt. They're putting in a bunch of different forecasts here. So how's everybody doing? What do we got going on? CPI was better, but also did you see the GDP? I mean, what was the numbers earlier from Germany, which they're in contraction now. So that's interesting. So inflation is probably going to drop a little faster there. What do we got going on this week, though? Very important week in the markets today. Not so much. We got Dallas Fed Manufacturing Index still forecast to be in the crapper. And then we got some bill auctions. Tomorrow we have Red Book Case Shiller home prices, Chicago PMI, consumer confidence, Dallas Fed services. By the way, remember, boy, the inflation expectations on Friday came in much higher than expected, and we sold off with that, looking for overall a bottoming formation to form sometime this week, possibly early next week, but this is the highest probability for at least a short-term sideways to bounce correction. Going into Wednesday, and remember, a lot of times we get key market reversals around the Fed meetings. The Fed meeting is on Wednesday. Now, it's going to be all for the pause. The pause is baked in. It's all going to depend on the press conference. So the press conference is going to be more important. What else do we have? We have ISM manufacturing, S&P global manufacturing. So that's and the JOLTS numbers on Wednesday. Then Thursday we have jobless claims. And what else do we have? We have jobless claims. That's really factory orders. Yeah. But the big thing then we got non-farm payroll Friday. Non-farm payroll Friday and the ISM services numbers. So Wednesday and Friday are important now from an earnings standpoint. And earnings, besides McDonald's of coming out with that beat this morning, Apple after the close on Thursday. That's the biggest, most important one this week in terms of this is again the part of the Magnificent Seven, whatever you want to call it at this point. That's the big one. Other key things, we got AMD after the close on Tuesday, PayPal, Roku, Qualcomm after the close on Wednesday. By the way, Starbucks is technically, it's not after the close, it's before the open on Thursday. This is incorrect. It's before the open. So that's where we'll see. That's about it. But the big thing, again, Apple this week. So Wednesday, Thursday, Friday are the three major key days this week. Pretty green morning across the board. Things bouncing back after a lot of selling pressure last week. The groups, pretty much everything up. Let me just do a quick refresh. Yeah, everything's still up. Consumer cyclical, comm services, healthcare, and technology leading the way. FedWatch tool, again, pause fully baked in. No more rate hikes priced in. First cut priced in for next June. So we'll have to monitor to see how that changes after the press conference on Wednesday. Fear and greed also in extreme fear. Now, this is one of the reasons I'm watching for a bottom, but there's a number of them. A, we're hitting some very key levels. B, for those Elliott wave people, we could be getting to the end of an A, B, C, D, E correction. Not a 1, 2, 3, 4, 5, and A, B, C, D, E because of the overlap. If you don't care about Elliott wave, don't worry about what I just said. All right. So, good morning, Royal Palms. Good morning, Sashi. Good morning, Martinez. Good morning, Options 22. All right. So, when I'm talking about an overlap, just for people who do like to follow Elliott Wave, see this. If this was, it can't be a 1, 2, 3, 4, 5, because the correction of 4 should not come above this base of 1. So this is why it'd have to be an A, B, C, D, E diagonal. We also are in the area. I'm not saying this has to be the bottom today. By any means, I'm watching for a bottom this week. What would confirm a bottom this week is we have to get some serious, either a bottoming formation, or we have to get the primary reaction up and then a pullback reaction to gauge whether we get a double bottom, whether we do a shallow correction. Now remember, overhead we have the 200, we have the declining rotation zone, we have the key break of prior major support now as resistance. We also are going into the seasonality where we should start getting the time frame for an end of year bounce. Now, I don't think it's going to make it all the way through the end of the year. But if we start getting a more significant bottoming formation, I'm at least watching for the bounce initially into Thanksgiving. Thanksgiving is on the 23rd this year. I think that's right, the 23rd. Could somebody verify? Oh, I know it's on a Thursday. But can somebody help me verify if that's the 23rd? Good morning, Christoph. So do keep that in mind. That's what another reason. There's lots of factors why I am watching for a bottoming formation coming up, but in no way, shape, or form am I looking to go to taking out the highs from Friday. Remember, we also had an intermediate sell signal. Intermediate sell signals. Again, we can get significant bounces after them, but I will be watching for the next rollover play. There's lots of overhead resistance. Now, so far, gap up inside day today from Friday. We had a fair amount of selling pressure on Friday. We also have a cluster. This is based off a 4-hour pause, but we have the cluster if it's going to finish the sloppy head and shoulders, and we have a little projection down there. So 4,100. We could still roll over down here and retest these key levels, especially Friday's low. If we go through Friday's low, 41.22, 4,100, 4,101 is key, then 40.80, and then 40.68. So that's where we sit. I'm really paying attention to Friday's high and low. Do we have any other key thing besides we have the first in a pretty significant divergence? You see higher low RSI, even cycles formed a higher low. The first key resistance on any continued rally is 41.86, 41.85, 41.86 area. Looking at the little bounce with the gap up, so far, I'm going to be watching right around, unless we go make a new high right into the open, 41.45, and then 41.40 roughly on a closing basis, a 1-hour closing basis. If we get below there, I'll watch for the gap fill and a retest of that low area. But that's what I'm paying attention to so far today. The minor support coming in about 41.49, 41.50. Let's see what else we have. From Elliott Wave, this is the end of a diagonal and waiting for a bounce before a bigger rollover. Yes. Yes, that's correct, Sashi. I've been looking at a new ratio to see where we are in the flight to safety. XLP, XLY. That would be a ratio of things needed versus things wanted. I see a triggered weekly head and shoulders. Let's see if we have some time to look at that in a bit. Christoph, I noticed there's a lot of relative strength in commodities. DBC and DBA. Apart from that, the big four, insurance, energy, and communications, are still doing very well relatively. Yeah, there is some strength in DBC and DBA also. A lot more interest is popping up in stuff like uranium also, which I put in the commodity sector. NASDAQ. So we also had the gap up. If we start rolling over, remember, we don't really have a super long-term bottoming formation yet. This Did not quite hit the 75. Came close, but did not. So this cannot be traded as a double. All right. But if we start really breaking down below 14,325, I'm watching for the potential gap fill between Friday's close and Sunday's open. So that's what I'll be paying attention to. Also, keep in mind right here, let me just get to the little pausing area. If we do roll over, just because I'm watching for the end, that does not mean, I'm going to stress this, does not mean it has to happen today or tomorrow with a bottoming formation. It can take a few days to carve out. But we have the 200 on the NASDAQ futures just below this area. So roughly between 1436 to 1470 could be, if we do break below Friday's low, could be watching for, below Thursday's low, could be watching for that to get tested and find very key support. Now, in terms of this morning, Friday's high and Friday's low are key. First would be the gap fill to Friday's close, and then would be Friday's low coming in 14,209.75. The gap down open from Wednesday to Thursday, 14,425, and Friday's high, 14,407, are the key resistance levels. You get beyond there, there's still a gap left behind to Wednesday's close, which would be my next target area, 14,478. And then the key target area, if we don't go on to make a new low, would be 14,544. Time for a rip your face off bear market rally. I don't know if we'll get a rip your face off one, but we should be setting up for a number of reasons for that bounce. That bounce is going to be very interesting. The bounce is going to be very interesting, especially if we get up to this 14 in the NASDAQ, 14,700, 14,725 area, to see how it reacts around this prior major resistance. The Dow, which broke down significantly, keeping an eye on Friday's high and low. Before that, the next key level is about 32,900, then 33. 32.9, then 33. On a support basis, is about 32.5. The Russell coming down to the key harmonic area last week. I have it on a weekly chart right now because this is the lowest. This was a lower weekly close in the futures, not back adjusted. The lowest weekly close, even below the close from last June. So that's where we sit. That's where we sit. And the lowest close since the lows in September. Now, it did not close since the lowest close. It did not close below the lows in both June and October, September of last year. So that when I said June, I did not mean June 23. I meant June 22. The Russell's really got some heavy lifting to do up here. Some really heavy lifting to do. But on any bounce play, my major target is 1677. The minor target is 1670. We'll get some new harmonics after we verify we got a pausing bar here. VIX, still elevated above 20. 20 is still my key level. We start breaking below 20. I'll be shifting more into short-term bullish mode. It's got to start breaking down. So that's what I'm still keying off of right there. The DAX, with the numbers, we also had the numbers out of Germany. This morning, this double is, let's just see right now because I have to change the levels. Still on the table for a little mini double, but DAX would need a close about 15,020 on a daily basis at this point against the rotation zone. Lower probability. We also have some divergences coming in. We have market divergences down there. So the momentum to the downside in all of these markets that I've covered so far is pretty much waning. So that's another reason. But the first divergence does not always have to be the significant bottoming pattern when we've had this much selling pressure. Keep that in mind also. We could easily retest this low area. We still technically have the double bottom that's not triggered or confirmed in the 10-year note futures. If we rotate back down, back down to this 105.19 area, it's going to be invalidated. But if it gets a close above 106.22, would trigger, still against the rotation zone. This could turn into more of a sideways bottoming pattern with daily cycles at the top. So I don't know if this potential double, let me stress again, potential will remain in play. The notes, same thing on the inverse, the yield, the micro yield, still the double top potential is in play, but needs a close below 4.798. If we rotate back up, above this 4.96 area would be invalidated. So we could easily roll up with cycles at the bottom. The 10-2s, still minus 10 basis points, still climbing back towards zero. And interesting, still, we also remember triggered the weekly double that triggered back at the beginning of October and still climbing after a 1 week pullback, and now we've had a couple weeks back up. So this is definitely, from just the pattern standpoint, the bear steepener we should see above zero sooner rather than later. Dollar index, after breaking out of the sloppy channel, still holding, but nothing. I'm still watching this to see how this plays out. There's no great patterns in this right now. But as long as it's holding above 104.90, it's so far a sideways correction with weekly cycles getting back to closer to the bottom. No, we're near bottoming, but you see on a weekly basis after this multi-week run, this would be considered a sideways correction. You got to take it into the bigger context. So still watching in for the correction, burning off the overbought conditions and getting in the next week or so cycles back to the bottom. Crude, still no fantastic pattern in crude right now. So from my perspective, it's sitting on hands unless we start getting a close above 86. Or a closing break below 83. Other than that, it's in no man's land to me. Natty Gas, looking potentially to backfill to the gap left behind. I'm going to see if we do backfill that, how it reacts there. But still, we're in the pattern of making higher highs and higher lows. So you see here, after the longer base, I talked about that last week, we're still making higher highs and higher lows. So it's still in short-term bullish mode, even with pullbacks. Gold, so far, sideways correction. Key support, 1987. Bounced off the 75 harmonic, still watching for that 2052 level, but this is another sideways correction so far. So that key support, 1987. Unless we close below there, then I'll be watching for a pullback in more so into the rotation zone. Where else do we sit? Japanese 10-year bonds still climbing, close to 90 basis points. So this is interesting. Now the yen, little pullback. So you got the break above into the 150s, and then the pullback actually below the short-term very key support. Still interesting enough, holding the daily rotation zone. But no major intervention plays just yet. So going to keep an eye more so on the 10-year yield. Euro, we're still the triggered channeling. No close below that 62.5 and no stop raise yet. So we still have the channeling triggered double pattern. The pound, nothing really. A multi-bottom, triple bottom, running out of momentum here with weekly cycles at the bottom. So going to be starting to watch for a bounce play in the pound, but no fantastic setup yet. This on the 4-hour basis just barely got into the double territory. So do keep that in mind if you're pound, if you're a trader of the pound, I would definitely use conservative targets on this one, but you need a 4-hour close above 121.63. And you see that's just a correction for this down move. Okay, that doesn't even get it. It still could be in declining lower highs on the weekly, even with that playing out. The spiders, again, we should have a nice gap up today. 413.52. The first thing I'm watching on a rally is the open from Friday, 414.19. Then above that, 416.44. The key support, first area is 412.50. Then personally, once we get the opening area in, I'm going to be putting on the harmonics from the low on Friday to the mid-morning high to see on any pullback. But the key level, if we do roll over, would be to Friday's close, 410.72. Then it would be to the low, 411.22. If we break below this week, below the low, come on, of Friday, then the next key area is about this 406.50, 407. The Qs, we had the inside day to Thursday on Friday. So far, 347.71. So the key area I'm watching is 348.95 to 349. If we get above there, the next key area is 350.34. And then for if the rally continues this week, 353.40 area. On a rollover play would be to Friday's open, 346.43, and then to Friday's close, 345.31, and then 343.70, and then possibly take out the lows. If we take out the lows from Thursday, the next key area is at 200, coming in right about 339.50. What else we have? I'll get to some other stuff in a second. Tesla. We still have a potential mini daily double bottom against the rotation zone. Would need a daily close above 222.05. Remember, on the bigger picture, last week, you can see it triggered against the weekly 200. It triggered the double top pattern. So even on bounce plays, watching for rollovers. The stop, by the way, for the triggered big double top pattern is 266.69 on a closing basis. So that is the key area I will be watching, because until you get back above there, the pattern could take multiple weeks to play out. NVIDIA on the weekly closed now below the weekly rotation zone and right at the breakdown level. So far a bounce up, but I'll be watching for rollover plays in NVIDIA, potentially with AMD earnings coming out. Now, if AMD beats, we could see a sympathy move back up. This support has not decisively, the key support has not been decisively broken at this point yet. Let's get to some other stuff. Sashi, XLE. XLE. On the weekly basis, hold on, let me get back to that daily basis. On the weekly basis, you have to check something here. Off the 87.5. Does this work for a weekly double? It would need a weekly close, and yeah, it does. A weekly close below 84.26 only on a weekly basis. If it starts breaking below there, be looking at roughly still, the key level is still 82.61. We start closing below that on a daily basis, we could see the pullback to this 77, 82, 78 area. Keep in mind, with the Middle East situation, anything can still happen in the energy complex. What else you want to? Christoph was talking DBA and DBC, which are the architecture, the agriculture fund. DBA is the Invesco Agriculture Fund, which took forever to play out the weekly double. See the weekly double, which took, again, remember, weekly patterns, and it came up here, double topped up there, and it now is turning into a triple top territory. So definitely building up. We break above 2231. This is definitely still forming higher lows. Now we formed double top high area, but if it starts taking that out, I'd be watching for a return to the May of 22 highs. Still overall in a bullish pattern. Christoph is completely right. DBC, the overall commodity index, which is breaking out of the channel. Now, we do have this little mini potential double top, which is just barely valid. That's the only thing that would have me pause. This might never trigger. That's the only thing that would have me pause for any bullish in the short term. But overall, it broke out of the channel, came back down, retested, and trying to move up. If we start breaking above about 2560, 2660, and then it could be off, would be the next target, then it could be off to the races. The only thing that changes that is a close below 2369. And Sterling has been looking at, let me see if I can get this in here correctly, XLP divided by XLY. What did I do? XLP. Oh, do I not need, I forget if I don't. XLP divided by XLY. That's one of my other platforms where I need the equals. Isn't that right? All right. Somebody. What is going on here? Why isn't anything updating? Huh. I'll have to call that up. I did that without the equal sign. That was my other platform I was thinking of. XLP divided by XLY. Oh, there we go. All right. It was just taking a while. So, 8 of the last 9 days have been red. Oh, that was the ES. Where'd I go? XL. This would be a ratio of things needed to things wanted. Hadn't triggered weekly head and shoulders. Hold on. Where did it go now? There it is. Boy, it's bad. It's definitely a case of the Mondays. Definitely a case of the Mondays. So yeah, that would have been triggered a few weeks ago. Is it valid, though? Is it valid is the question. With a horizontal neckline. Doesn't look to me like it's valid. So it doesn't fit in my rules. So that being said, let's see where it sits from a harmonic perspective. Some people might trade that as a head and shoulders. I wouldn't use the targets. It's closed below the 62.5 multiple times. So my target would be between 0.37, 0.371 and 0.339, which would take it back to November, December lows of 21. So yeah, I mean, and it's below the weekly 200 on the ratio, so I'd be watching for continued rollover plays in this. Oh, you didn't use the horizontal neckline, you used this really steep vertical. Let's just see where those targets were. That's a very steep neckline. Let's see where those are. Just for grins. So that would be to here. And that would have been triggered back on May. So that does work, but it takes us into the same target range. So it takes us into the exact same target area. So using that, you'd be at about 0.36. Either way, I'd be watching for rollover plays in your XLP XLY, things wanted versus things needed. All right, we have the open. Sorry, I ran on into the open. Let's take a look at the S&P. All right, little breakout potential move. Let's see what the tick is saying. The tick. All right, yeah. Now, remember last week we weren't even opening above 600. We definitely have the change. So we opened above 1200. And now we're pulling back that 600 range. So let's see on the secondary bounce back up to see where that goes. To see it can get back above 1,000 to get some strength in here. All right, NASDAQ. Little breakout right into the open. But now I pay attention to both these on the secondary reaction on the tick to see if the S&P can hold this 4168 support area and then push back up with a stronger tick. With that, I shall talk to everyone tomorrow. New Futures Edge podcast should be dropping today. So we will take a look for that to come out in a while. And I shall talk to everyone tomorrow on Halloween. Have a wonderful trading day. Bye for now.